it wouldn't be surprising now at this point, but it's not really. It hasn't been super economic. They've been high cost ounces to get out of the ground. But I wonder if somebody's going to come along and just say, screw it. We'll assume $10,000 gold going forward and $200 silver, and $8 copper or whatever, and we'll just finance our growth this way for the next 20 years.
Eastern nations are embracing the digital system, but the BRICS nations are also creating their own gold and silver exchange to rival the COMEX. And I'm not talking about the Shanghai. I'm talking about for all of the BRICS nations in doing a gold and silver exchange to facilitate honest money. And the way the West is doing is we're not incorporating gold and silver unless it sees grassroots efforts.
The longer-term technical postures for gold and silver remain significantly bullish. Both markets have seen their near-term chart postures also improve over the past few weeks. This will continue to invite the chart-based speculators to the long side. According to BlockBeats, on March 11th, BlackRock stated that despite recent fluctuations in the precious metals market, the upward trends for gold and silver have not yet ended, and emerging demand is reshaping market structures. JohnRubino and Robert Kientz are experts in financial markets and precious metals, offering insights on gold, silver, and long-term investment strategies. In this video, JohnRubino states that corrections in gold and silver are normal after strong rallies and should not be seen as the end of a bull market. He suggests that even though production costs for metals have been high, it wouldn't be surprising if a company decided to plan for the future based on much higher prices such as $10,000 for gold and $200 for silver. In his analysis, Rubino also warns that risks in the private credit sector could trigger the next financial crisis, potentially similar to past market collapses. This type of crisis could ultimately accelerate the long-term bull market in gold and silver. While discussing silver specifically, Rubino mentions that global demand for silver is already exceeding supply, forcing the market to rely on above-ground stockpiles. With expanding use in technologies, large industrial companies may begin securing supply by investing directly in silver mines. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from JohnRubino and Robert Kientz's recent interview.
They've had phenomenal runs. And normally you get big corrections after big runs. And this is, the correction here would be to be expected. It's not a big deal in a bull market, although it feels like a big deal in a bull market, but if you look at the chart of any long positive run for any asset, you see corrections that are just stomach churning at the time. And they function to shake out the weak hands and bring in strong hands, and then the bull market can continue. And with gold and silver, the long-term fundamentals remain great. I mean, gold is the alternative money when the fiat currencies of the world start to fall in a disorderly way, and we're kind of in that time now. We're in the death spiral of fiat currencies as we speak. And so it really doesn't matter if gold corrects in the short run, because we've still got that big parabolic run when the dollar and the euro and the yen really start to fall off the table and capital starts pouring into alternative forms of money, of which gold is the biggest and best. Silver will be pulled along by gold when the time comes. The gold-silver ratio will still be valid, because silver is a lesser monetary metal, but still a monetary metal. But it's also got a great industrial metal story. So I think no matter what happens in the short run with gold and silver, that they've got very bright futures, at least when valued in fiat currencies. So I would use what's happening today, if you're not fully invested in the mining stocks and in physical, to start looking at ways to take this correction and exploit it by putting in some lowball bids or selling some put options on some high quality mining stocks, things like that. This is a chance to add to your holdings if you aren't already fully invested. If it's private credit that starts to collapse and all the money starts pouring out of that sector, then that's really deflationary. That'll tank the stock market and a lot of different fixed income markets, especially the really dicey ones that say private in their name. And that would be bad for gold and silver. at least the last couple of times, in 2008 and in 2022, I think it was, when the stock market tanked, it pulled gold and silver and then the miners down for the ride. Now, in both of those instances, the Federal Reserve and the other central banks stepped in with aggressively easy money right away, and then gold and silver just took off. So it was a V bottom for them in both cases. And it was a great buying opportunity for the miners in that situation. So that's one possibility. The other possibility is that coming when the crisis comes now, when we're already very worried about the world's fiat currencies, and we're ready, we've already had wild gold and silver bull markets, which has educated a lot of people about monetary issues. That we've already got a lot of capital that's ready to flow into real assets as soon as there's any kind of a financial crisis. And it could be that as private credit starts to tank, a lot of the money that pours out of that sector goes into gold and silver. So, in other words, I don't know. I don't know what gold and silver will do in the short run in this kind of mixed scenario. And then, of course, we've got AI as a wild card now, too. Oh, silver is just such a great story because it's a monetary metal, and 60 is a reasonable place to buy it if it's 1/60th of an ounce of gold. But at the same time, it's an industrial metal that's in shortage. We do not produce enough silver to satisfy the global demand for silver. And that means we're using up all the above ground silver stocks to cover current demand. And the technologies where silver is used are growing dramatically and improving in a lot of ways, like the new generation solar panels use more silver than the current and older generations of solar panels. Next generation electric car batteries are phenomenal if they pan out. If the things that the battery makers are saying turn out to be true, then everybody's going to want an electric car. And those batteries use a lot more silver. And of course, today's missiles, which we're running out of and have to be replenished, use silver. So you're going to reach a point where I think we're going to see the users of silver start taking extreme measures to guarantee their supplies going forward. And that's going to include big users of silver going out and buying silver mines. And that we're already starting to see that happen. I think it was Samsung took a position in a silver miner in Mexico where they get some portion of that silver mine's output. Well, that's very logical. If you're Tesla or if you're General Dynamics and you're worried about not getting enough silver 2 years from now, you're going to take steps right now to make sure you do. And one way to do that is to buy a big silver mine. So I think we see some really interesting stuff in the mining sector now, where you have these whales coming in that were certainly never there before, and currently have insane amounts of money by the standards of mining. Tesla, I think, could buy all the silver miners if it wanted to without borrowing money, just using resources it has at its disposal. And there are a lot of other big companies in kind of the same boat, where they can easily go buy a silver mine that will satisfy their demand for the next 20 or 30 years. And that's phenomenal for mining. So, I think that's the future for silver. And I think it's going to be spectacular. And that's leaving aside the whole COMEX default kind of thing that people are talking about that might be a near-term catalyst. So I think silver's not crazy cheap based on recent history right now. But I think 5 years from now, we're going to look back and see $80 as a reasonable entry point for the metal based on what's happening now.
During the interview, Robert Kientz explains that Eastern nations are rapidly adopting digital financial systems while simultaneously reinforcing their gold and silver reserves. He highlights that the BRICS countries are developing their own gold and silver exchange to rival the COMEX, aiming to create a system grounded in honest money. While these nations leverage their significant gold holdings, Western countries, including the U.S., are moving toward digital currencies, such as stablecoins or central bank digital currencies. Seasoned investor Robert Kientz also warns that the rapid adoption of digital systems carries risks if governments gain excessive control over individual assets. He predicts that ongoing geopolitical conflicts, rising commodity pressures, and mounting global debt could be used as justification to implement digital currencies, particularly if fiat systems fail under stress. History shows that major wars and economic crises often drive major monetary changes, and current conditions may create the perfect environment for launching a new digital financial framework. While digital currencies offer efficiency and convenience, Kientz stresses that careful safeguards are essential to prevent misuse or confiscation of citizens' assets. Let's jump into the interview.
Eastern nations are embracing the digital system, but the BRICS nations are also creating their own gold and silver exchange to rival the COMEX. And I'm not talking about the Shanghai. I'm talking about for all of the BRICS nations in doing a gold and silver exchange to facilitate honest money. And the way the West is doing is we're not incorporating gold and silver unless it's these grassroots efforts. The people, I represent the people when I go argue this in front of Georgia or Florida or wherever I do it. The difference is the Eastern nations have more gold. Gold is still going to be an underpinning in their system. I do think that they're going to go digital, and I think the U.S. is just going to do it differently. But to be honest with you, Elijah, we have an opportunity in the United States because of our federalist system and breaking power into three layers, federal, state, and local, to prevent that system from just rushing over us without a fight. We can fight. We still have the voice of the people. That's the only difference. But if we don't do what we need to do, we're going to be just like everybody else. And maybe it's a stable coin instead of a CBDC, but if the rails are all the same, it's not going to matter. It doesn't matter if it's a stable coin, a CBDC, however you want to do it. If it's a digitally backed coin and it's got to have treasuries and dollars in it, that's a national digital currency. I don't care how you slice it. And the only difference between us and them is that they're catching up with us very quickly. And so that's going to become the norm around the world. And we have this short window of time because Trump in the U.S., the Trump administration and all the U.S. leaders want to go digital. And one other thing I want to point out, I was doing research into AI for a video I did a couple of weeks ago. The United States right now is spending 6 times the amount of money on AI that China is, which is in second place. The revolution of AI and the digital system is going to be in the United States. It's starting here. The investment is here. The laws are here. This is ground zero for the worldwide digital system. And this is where we have to fight it. That's the only difference. It's going worldwide. The place you fight it is in the U.S. and in the West, because we still have the power of the vote and of the people, and we have the ability to speak our minds. They don't have that in the U.K. There's no right to free speech in the U.K., which I found very interesting. So this is it. This is ground zero for fighting the digital currencies and system. And I'm not against the digital system. I'm against the digital system being used against the people. I do see benefit of digitizing things and making commerce easier and making ownership of your assets easier. But those laws around what you own need to be changed and strengthened. And if we don't, then that can very easily lead to the negative aspect of a digital system, which is confiscation or temporary seizure to support the U.S. government. And it would allow the government to run away and just take the assets of the American people and go spend it. I mean, if you think the printing press is bad, they still have limits on how much they can print, and they keep printing, but it's taken 13 years now to get here. And the digital system, if they wanted to start a new war, if they wanted to do whatever they want to do, it's so much easier with a push-button digital system. Well, I think if we go to more widespread war, what's going to happen is all the governments of the world are going to go to their people and say, we need to finance this. War is, if you look at U.S. history, the greenbacks came from the Civil War. We needed to finance the war, and so we started printing greenbacks, and they hyperinflated. I mean, the paper currencies we had before the Federal Reserve note, which we call the dollar now, which shouldn't be called the dollar. The dollar referred to a specific grain weight of precious metals. But through Supreme Court having this really wide interpretation of the monetary powers of Congress allowed the fiat system to come into play in the Federal Reserve Act. They supported it. And, that system, it has its limitations. And if you're going to widespread conflict, and there's also a massive commodity war going, and think about what commodities do. They help build economic engine, and they give you power and control. And so people want to control, the governments want to control these. And if we go further into these wars, then currencies are going to blow up along the way. There's going to be tremendous pressure on the treasury system. China doesn't hold the most treasuries anymore. It's Japan. and China sold so many, and they're continuing to sell it. In Japan, with their demographic and fiscal crisis, to reverse the slide of the yen and of their treasury rates, the rise of their rates is going to have to start dumping U.S. treasuries because it's one of their biggest assets. And then there's a report coming out that I just read today on Zero Hedge that the treasury is monetizing the debt by buying back some issuances and issuing others. In other words, we're buying our own debt now. It's not just the Fed doing it. Now the treasury's buying their own debt. They're retiring old debt and buying new debt. So we've now gotten to the stage where we're financing our own debt. And so if we have to continue to increase to buy missiles and to escort ships into the Strait of Hormuz and to do regime change around the world in Venezuela and the Middle East and Ukraine and whatever, then that implies the currency is going to blow up and we're going to go to the digital currencies. And yes, I do think wars usually, when you get to this level of war, it usually has something to do with the currency blow up or a major worldwide economic issue. And we happen to have all of them. We have a lack of commodities because of lack of investment and people going to war over these precious commodities. That's part of the reason we're in the war. The other part of it is because of the financial system and the threats of the financial system. And then the other part of it is because war generates revenues, which are going to help deal with some of the debt issues because they're going to print money and pay down that debt that way. And then they're going to institute the digital dollar. So yeah, they're all connected. They always have been through history. The big wars are always connected to monetary and economic issues and ownership of asset issues, namely commodities and land and things like that. And we're seeing all that occur. And it would not surprise me if this is the set of events which implements that new digital system in which they come in and say the fiat system died because of all that conflict. Now we need a new system. Hey, we happen to have been working on these digital currencies and you guys like Bitcoin anyway. And heck, XRP. I mean, all the banks are using XRP. Why don't we just turn this on? We just press a button. But all the laws are being done ahead of time. So you know what's coming. The laws are already done. And yes, they know that through these type of economic conflicts and currency crises that new systems emerge. And that's the system that they want. And the banks know it, and that's why the banks are on board, because the banks can read the tea leaves. They can see the chessboard. They know what's going on. The banks know they got to get on board or they're going to be left out in this system.
Analysts predict that gold may continue its upward trajectory in response to weakening fiat currencies and central bank policies, potentially reaching new all-time highs over the next several years. Overall, both metals are expected to remain key pillars for wealth preservation, strategic investment, and long-term financial security. In a world moving toward digital currencies and ongoing economic uncertainty, how will you position yourself to protect and grow your wealth through tangible assets like gold and silver? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.